Hello everyone, welcome to another episode of In Conversation by Advisorkhoj. Today in conversation, our guest is Mr. Gautam Bhupal, Fund Manager Equity with HSBC Mutual Fund. Welcome Gautam to In Conversation.
Thank you, Suren, and thanks for having me here.
Our pleasure. So Gautam, just to begin with, if you could just tell our viewers about your background, about your investment management journey.
Sure. So I am chartered accountant and company secretary, and I have also done MBA from MDI Gurgaon. I've started my investment journey with UTI Mutual Fund. I worked there for a bit more than 4 years as a research analyst. And from there, I joined HSBC Asset Management, and I've been working here for more than 16 years.
16 years.
Yeah. So
Wonderful.
it's been a long time, yeah.
Wonderful.
Currently I'm managing few funds. So currently I'm managing infrastructure fund, business cycle fund, consumption fund, tax saver fund, and also managed solution fund. So these are the 5 funds which currently I am managing.
Great, great. So Gautam, HSBC Mutual Fund is launching their new fund offer of HSBC Financial Services Fund, launching on 6th February and closing on 20th of February. So could you take our viewers more, in detail about what this fund is about? What's the strategy? What style of management will it be? More growth or value? What kind of stocks? And why a financial services fund in markets today?
Sure. So let me start by addressing why we should look at financial services fund at this point of time. Let me break this question into 2 parts. First is, if we look at the banks and NBFCs or lending segment in general, they have not done as well as some of the other sectors in, say, past 3 to 4 years. But if we look at the health of this segment, it has steadily improved. We have seen a steady reduction in NPAs and slippages. We have also seen a gradual increase in their return of assets. So there's been a significant improvement in the balance sheet quality of this segment. Also, at this point of time, they have a strong capital adequacy ratio, which indicates that for next 2 to 3 years, they don't need to come to the equity market to raise fund. When we look at the valuation, they are trading at, say, 1 standard deviation below their historical 10-year average valuation. So risk reward is very, very favorable for the lending segment. Coming to the non-lending segment, what we have seen that in the last 10 years, the share of financial assets in Indian household has steadily increased, and this has increased, and their share has increased from, say, 41% to 46%. And this has come at a cost of physical assets, which has decreased from 59% to 54%. And within the financial assets also, we have seen the share of equities and mutual fund has increased from, say, 2% to around 8% in FY24. So this trend clearly indicates that Indian households are increasingly channeling their savings more into productive assets, and particularly the financial assets. On back of this shift, we have seen a substantial growth in some of the non-lending segment in past few years. But despite that growth, the penetration of these products are still very, very low. So just to give you some couple of examples, if you look at the number of demat accounts, we have seen a very sharp increase in the number of demat accounts. But currently, if we look at the total number of demat accounts, they are just 15 crore. And if we look at the number of active NSE clients, they are just around 5 crore out of the population of around 144 crore. So there is a significant under-penetration which is still there. Another thing we can look at is that if we look at the AUM of the mutual fund industry, they have grown at an impressive CAGR of 20%. But mutual fund assets still have only mid-single digit share in household savings. So we have a long runway for growth in the non-lending space. So we believe that overall, if we combine both lending and non-lending space, they provide a very good risk reward, and at the same time, they provide a long runway for growth. So that is why we are very excited, and investors should look at this particular space at this point of time.
Sure.
Coming to our approach of investing, so we will basically look at investing into, say, industry leaders who have seen multiple market cycle. They have a very strong balance sheet, and they are generally growing at similar to industry rate or slightly above industry rate. And this portion of companies will provide growth and stability in the various market conditions to the portfolio. So that is one segment of companies which we look to include in our portfolio. And then the second segment which we look to include our portfolio would be companies which are relatively small, but they are challenging the leaders and capturing market share due to their robust execution capability. And hence, they are growing at a significantly higher pace compared to the industry average. So these are the companies which will provide the growth to the portfolio and help us in generating alpha.
Sure.
So a blend of these two will be a very good way where we believe that we can really maintain or go through the various market cycles and still create a return for the investors. So this is how we are looking to approach constructing the portfolio in this particular fund. In terms of number of companies, we are currently looking at around 30 to 40 companies in this particular portfolio.
30 to 40 companies, sure. So it is going to be market cap agnostic, more flexi, sort of a very momentum sort of driven fund?
So we will not be momentum driven. We would be, but it would be market cap agnostic. It would be also segment agnostic. So when we are looking at either banks or NBFCs, or when we are looking at non-lending space like asset management, brokerage, insurance company, we would be largely agnostic to what are their weights in, say, benchmark, or what are the weights which are generally there. We will be basically creating the portfolio from the bottom-up approach and look at individual companies based on the merit, based on their growth outlook, and then only we will include these companies in our fund. So it would be, we believe that we would be agnostic to market cap, we will be agnostic to various segments, and we will create a portfolio from the bottom-up perspective.
Sure. And typically, how long would you suggest an investor to hold this portfolio?
So we essentially suggest investor to look at this portfolio from a longer term perspective. So typically our advice would be to look at this particular fund for investor who are looking to invest from 3 to 4 or maybe longer term perspective. If an investor who is looking to come with an investment horizon of below, say, 1 year, then maybe this fund may not be suitable because our investment philosophy is evolved around investing for a longer term, and we see this space to really play out over a long-term period and generate a healthy return over a long-term period. So again, our advice would be only for investors who are looking to invest from a longer term to look at
longer term perspective. Sure. So why should investors and distributors look at suggesting the HSBC Financial Services Fund NFO?
Okay. So in our fund, we again are trying to create a balanced representation of both lending and non-lending companies, and this would be in contrast to, say, benchmark index, which is highly skewed towards lending and large cap companies. So if you look at the benchmark, which is a BSE Financial Services Index, the lending company constitutes around 80% of that particular index, and large cap companies have around 76% weight in the index. And in our portfolio, we will create a more balanced representation of both the large cap companies and the market or large cap, mid cap, and small cap companies, as well as lending and non-lending companies. And this, I believe, will be the key factor which an investor or distributor should keep in mind for our fund.
Sure. So we are actually having this conversation at a very interesting time. We just saw the budget pass by. So obviously the perspective of the market was quite interrelated to the budget. So what's your your view about the equity markets, let's say in the medium term?
Sure. So we have seen that equity market has given a very good return to investor over the last 3-4 years. However, in the current year, we are seeing some slowdown in growth expectation of GDP also, where the growth expectation has come down from 7% to 6.5%. And also in the corporate earnings, the growth expectation has come down, where the earnings growth would be lower than what we expected at the start of the year. In that context, we also need to set the return expectation for the current year lower compared to what we have seen, say, over the last 3 to 4 years. That is something which should be kept in mind. But again, if we look at the overall market, we don't really see any major negative in the market when we are even looking at the macro level or the fundamentals of the company. And hence, we are very, very constructive or positive about the market from medium to long-term perspective.
Sure, sure. So dust should settle down probably a couple of months down the line.
Sure, definitely.
Okay, so Gautam, through this in conversation today, what message would you like to give to mutual fund distributors, advisors, investors, more in particular about your new fund offer of HSBC Financial Services Fund?
Okay. So if you look at the currently the financial services sector, currently the lending space is trading at a very, very attractive valuation, and the non-lending space offered a very significant growth in the coming years. So a blend of these two will create a very good portfolio, in our opinion. And in the current market, where there has been a lot of volatility, it has created a pocket of opportunities where valuation of some of these high growth companies have come down, and which provides a very good entry point, in our opinion. And hence, we believe that in the current volatile market, it is good time to look at this particular space and our NFO, where we will be able to judiciously deploy the money over coming months, and we'll be able to take advantage of this volatility which is there. So that is where we are suggesting an investor to look at this particular NFO.
Sure. Great, Gautam. So for our viewers, this is Mr. Gautam Bhupal, Fund Manager Equity with HSBC Mutual Fund, talking about the new fund offer, HSBC Financial Services Fund, opening on 6th of February and closing on 20th of February. So Gautam, thank you very much for taking us through this new fund offer and the style of management, and why do you believe a financial services fund is needed in a client's portfolio at the moment. Thank you very, very much for joining us.
Thank you. Pleasure being here.